All right, guys, welcome to the SRS liftoff call. My name is Frank Euphemia. We have a few guests on today for the Q&A. We have Devin Martin with NLG. I believe Marty is getting on. I'm not sure. We got David Allen, John Gavin, myself. Let me see who else. I'll find the other ones as we continue to go. But this is the Q&A week. So you guys fire away with any questions you have relating to annuities, relating to IULs, and we will answer them to the best of our knowledge. If you ask us a question that nobody can answer, we will absolutely get your information, get the answer, and get back to you. So if y'all could start, everybody's muted because I can't deal with 74 people talking and people being unmuted. So if you have questions, type them in the chat and then we will ask them as best we can. And if we don't get to your questions, you'll have contact information for some of us at the end of the call that you can call and always ask questions. So that being said, thank you, David, Gavin. Thank you. Who else? We got Devin. Appreciate you guys for hopping on. Let's rip. Let's see. Anybody have a question? What's up, Devin? How are you?
Doing well, Frank. How are you, my friend?
I'm excellent, man. Life is good. All right,
Glad to
so
hear it.
we got a perfect question for Devin. Devin, on NLG, if living benefits are assessed by the client, accessed, sorry, did he spell that right? By the client, does the policy void or is it still in place with a lower death benefit? That's actually a really good question.
So if you take the full amount of the lump sum that we offer you, yes, the policy voids. There's a chronic illness rider that is not a lump sum payment. So if you take that rider, no, your policy wouldn't void.
Okay, thank you. See. The questions typically start slow and then they start firing away. I don't know why that works that way, but it's the way it works. Um, do we need to have 6 SIE and 63? Okay, no, you only need a life insurance license to do annuities, fixed index annuities. That's the kind that we do. If you wanted to sell variable annuities, yes, you would need your 666, 63, whatever it is. But to sell fixed indexed annuities, which is what we sell, and that's all that we sell, you do not need anything but your life insurance license. Haley asks if doing an increasing policy for an IUL for a younger client, but over 18, at what point should we change the death benefit back to level for the bet in the best interest of the client? That's a good question too, and it's one that we get fairly often. Devin, you want to answer that?
Well, I'd love to. So it doesn't
Any other
necessarily
IUL
matter
guys
the
in here
age.
anyway?
Whenever you have an increasing death benefit, you basically want to level it off after you're done paying premiums. Why? If the death benefit continues to increase, that means that the cost of insurance also continues to increase. So the rule of thumb is as soon as you're done paying premiums, generally speaking, you want to go from increasing to level. In the illustration system, you're always going to have it be the year after you're done paying premiums. For example, if I'm done paying premiums at age 65, I want that level death benefit to the increasing death benefit to level off at age 66. So the rule of thumb is whenever you're done paying premiums.
Got it. Okay. So if I'm going to start drawing at 65, that's when you flip flop it.
That's correct. In the illustration system, you always do the
Easy
year
rule of thumb.
after. Yep.
The year after. Okay, so the year after. Okay, that's a pretty easy rule of thumb, and that works 99% of the time, 100% of the time. Is there any scenarios where they might want to think about doing it sooner in that in any situation?
Sure, gets a little complicated at that point. If you want to do it sooner inside of the illustration system, that is, it's just to make the death benefit a little bit higher instead of having it be the lowest death benefit possible. Why would you do that? To fit more money into the policy instead of max funding it since the beginning. But I don't want to say 99% of the time, but a majority of the time, yes, level it
Okay.
off after you're done paying premiums.
Makes sense. Thank you. Let's see. Wasn't that F and G on the call? I don't see F and G on the call unless it says F and G. Hold tight. Nope, not seeing it. Tell me who's F and G. And I'll get to that while we keep going. Um, discuss a little bit about the new annuity products you all just added.
Would
What's
love
good?
to. For those of you that don't know about our older annuities, I mean, it's not new to you, but basically, we came out with a flexible premium annuity, a new one that is. So you don't have to have a lump sum of money. We do have single premium products, but Felipe, what I think you're talking about is our flexible premium annuities. You can pay for them for as little as $100 a month. The other annuity, the first one, Secure Growth, straight rate, you get a 0% floor or the cap. The secure bonus annuity has a 5% cash value bonus, meaning if you put in $100, we immediately give you $5 inside of the annuity, and then you earn whatever the interest does. Opportunity for you guys where to use it, your uninsurable clients. So if you have people that get denied with IULs, heck, even final expense, you can fund this annuity for as little as $100 a month. Sure, you don't get the living benefits, you don't get the death benefit. I mean, you do get the death benefit because it's just the remaining cash value in an annuity. But what I'm getting at is, regardless of insurability, you can fund this for as little as $100 a month. And again, that's a 5% immediate cash value bonus for 8 years with no fees whatsoever.
Perfect. Thank you. And we absolutely now have Larry on from F&G. Thank you, Larry.
You got it,
His
man.
tag is iPhone 37, not Larry, which would
I
have
have to
made it a
change
little
that.
easier for me to find you. But it's good
Yeah.
to see you, buddy. How are you?
Good, man. Great.
Awesome. Thank you for hopping on. I will get you questions. So now we got NLG, F&G, our two main IUL carriers for underwritten IULs, even maybe some express IULs in cases. So any questions about IULs, these are your guys. Any questions about annuities? We have guys, they both have annuity products. Obviously, we use F&G, NLG, Athene are our main annuity carriers. Um, we got David Allen and John Gavin that can answer annuity questions here as well. So let's keep it rolling. Uh Jesse's not on here, Jamie. When presenting a cash value on IUL, do you tell them an average interest over the years you're seeing, or I hate when this does that. Oh, Jesse's answer. Jesse is. You know what? I'm gonna make you a co-host too, Jesse. Bear with me, guys. I hate this call because I'm all over the place, but I'm doing the best I can do. Make co-host. Jesse, can you answer that out loud so everybody can hear you? Because I think that's a pretty good question.
When presenting the value on IUL, that one, or
Yeah.
yeah, so I present the indexes as an explanation of how indexing works in this product. So I don't tell, like, for instance, in NLG, or so I'll use NLG because it'll show them 14% average, or even on F&G it'll say the max look back is 15%. I don't try to pitch them like, ooh, you're going to get 14% or 15%, because that's like not true. So I'm not going to lie to someone. So I'm going to tell them how this is how the index works. And then I'll say what it says on the page. I'll say, so for instance, this index has performed at an average of this, but we are going to illustrate this at a very conservative 6.4554, whatever it is, depending on the carrier. We're going to illustrate this at here because we would rather over deliver and under promise than have you think it's pie in the sky. Now, that's not to say when the market is killing it, you're going to do really well, like you see here. And I point on the index. However, right now the market's kind of rough. So the good news is you're never going to lose any money. So that's kind of my indexing presentation. I show them what's what. I let them see it, but then I kind of bolster the idea that this is what we're illustrating it at. So that's how I present it. I don't want to I'm not going to lie to somebody.
Well, and I think that's a slippery slope when you get into start giving people rates. It's a bad idea. Um, because we can't. We're not, first of all, none of them are guaranteed unless you're doing a fixed product, which 90% of these we're not doing anything fixed. So, and David Allen made a good point that he's like, that's a great way to explain the annuity as well, because again, annuity interest could be 0.3%, it could be 13%, it could be 6%, it could be 9%, it could average out to be 7%. We don't know, so I always steer clear of giving someone a set interest rate. It doesn't ever tend to work out well for people. All right, let's move on. Thank you, Jesse. All right, let's see. Select income. Can you explain that? Activation bonus. Do you want to explain that really quick, Devin?
Yep, I put it in the chat as well. I used an example. Basically, this is an annuity where there's no roll-up rates or bonus in the beginning. It's all about how it grows in the cash value. It's very rate driven. Whenever your clients are ready to turn on the income, we multiply it by the activation bonus. And what is the activation bonus? How does it work? Just look at the screenshot I put in the chat. Pretty easy to follow.
Perfect. Larry, can you go over the pay on pass setter again? Because I've gotten people, you guys did that call, but I've gotten calls and I just want to make sure I'm telling them accurately so that everybody understands. I think hearing it more than once would be super helpful on how y'all pay on the pass setter product.
You mean commissions wise?
Yes, commissions wise.
Okay, pass setter is pretty standard. It's we don't do rolling targets on pass setter because typically the target is lower than the annual premium. So it's your typical advance and then as earned for the last 3 months. I think Everlast is the one where people
That's
have
the one I meant to
questions
say,
on.
obviously. So thank you.
Yeah. Yes. So if your target premium is higher than your annual contribution from or your annual premium that the customer is paying, for example, the target is 3,000 and they're paying 200 a month. So they're going to pay a total of 2,400 the first year, which is what you would typically get. What we'll do is we'll roll targets to the next year, the full a full 2 years if it's needed, and pay you the additional $600 to make up for that difference in target. So you'll continue getting as earned premiums or as earned commissions every month that the client pays into it until you reach the full target. So
Nice. Okay.
typically with the protection, and I'm pretty sure Devin, you guys do this too, with the protection, focused IULs, your target's going to be higher than what they're paying. It's absolutely flip flop when you're talking about cash accumulation.
Yeah.
Because when you're doing a path setter with cash accumulation, your target's going to be lower than because they're overfunding it, right? So when someone's overfunding it, they're going to be paying in more in the first year than what the target is, and when it's protection focused, they're going to be paying less than the target in the first year.
David's explanation.
Okay.
So we just continue it.
Yeah.
Yeah. There was another
What do
question on here, Frank, about if there's different underwriting engines between Pass Setter and Everlast. There's not.
Yes.
The only difference is that we've just, for the Everlast up to $500,000 and up to age 60, what we did is we just removed the option of telephone interviews and APSs. So that's not even an option anymore. So it's going to get we're going to basically make a decision on, what we see on the application and everything that we see in our database checks. So the same exact engine, it's just we're able to make that call faster.
That's pretty dope. Okay.
Yep.
Let's see what I have. Any other questions? I'm getting ready. Somebody's asking where I can find training on these. I am gonna copy the link. It's on our YouTube channel. Share, copy. It's actually on FFL National's YouTube channel, which is FFL National. You go there and you go to the playlists and you'll see we've got a few different things. We've got the Annuity 101, which we do once a month, the first Thursday of every month. We've got a new series, the Annuity Minute, which we're starting to send out now. There's only, I think, 3 in there now, but they're short clippets of annuity stuff. We have the SRS Liftoff call, which is the call we do every Thursday. We'll be adding the other stuff was from a while back, but those 3 playlists are the ones where you can get annuity help and IUL training as well. And they're labeled pretty good. So if it's an annuity week, it says it. If it's an IUL week, it also says it. So if you're just looking for IUL, just browse through those videos and you'll find what you need. Okay. Let's see if I missed any questions. Devin, do we have call? Okay. So I guess y'all are good, right? Like I can sit here and ask Devin and Larry and David questions all day, and I will if I don't get any in here in the next minute or so. Okay, so Devin and Larry both. I'm going to have you both answer this. Like, this is the kind of questions I would ask if I was an agent. Why would I write F&G over NLG and vice versa? Y'all, can you give me the 1 minute pitch as to why? No, I'm like serious. If I don't know anything, I'm trying to write IULs. Why would I come with you, Larry, versus you, Devin, and you, Devin, versus you, Larry? Give me, as you know, you don't have to be mean to the other person, but I want to know why I should choose you.
Devin, you want to do
Larry, you
cleanup,
could
or you
go
want to go
first.
first?
Look at this politically stuff.
just just to throw this out there, they're both incredible companies. Okay, so you can't really go wrong. You should write NLG or F&G over a company like a Moo or Americo when it comes to someone that's healthy enough to qualify for a fully underwritten IUL and that's really serious about cash accumulation. Both of those companies are going to be superior for your client, right? I think really what it boils down to is who you get comfortable with and who you like to sell. They're both going to perform very well. I think the pass setter has a little edge when it comes to juveniles over the long haul. I think it gets the gap closes in really tight when it gets to someone that's in their 30s and 40s and 50s. So I honestly think it's more of a personal preference on what company you like to work with. I do believe that F&G pays a little better, but I know NLG is trying to raise their targets this summer. So, um, you know, I'm basically pulling an 8 mile on Devin right now because he's got nothing else to say. But no, but yeah, honestly, it's I really can't say don't sell MLG and sell F&G just because I work for F&G because I think they're both great. They both do the industry very well when it comes to presenting the IUL and actually, having the IUL function how it should. Cash accumulation, overfunding, great index options and everything like that. So go ahead, Dev.
Perfect.
Guys, find out what makes you happy, what makes it easy for you to help as many families as possible, and makes you to receive money to invest in your business. As far as National Life Group goes specifically, we are the number one IUL provider for market share every quarter, every year. You can Google it. Why would you sell a National Life Group product in general? It's the full value proposition. So we're number one in IUL sales, but we don't even illustrate as far as cash value projection, top 3, 4, 5 in the industry. We under promise and over deliver. We have the product for one of the longest times outstanding in the industry. So it's priced well. It's going to perform well for your clients. We publish our rates inside of our websites. We've never increased the cost of insurance on existing books of business since 1848. And we're not a public company. So we care about our policyholders more than anything else. At the end of the day, we go up to $3 million, no blood, no urine. Obviously, depending on your age, it's tiered, right? 66 and older is always going to need a paramed, but 35% of our policies that are submitted at National Life Group never touch a physical underwriter. Also, coming in May, literally at the end of May, we're coming out with a brand new IUL, and this is already a fact. It's going to pay 20% more on average with Target. So again, your levels are going to stay the same. But think about this, and I'll close with this. I would rather have 80% of a watermelon instead of 100% of a grape. So sure, if you get paid more, that's fantastic. But if somebody tells me they get paid more, I'm going to ask you the question, can you do math? And that's why I use the analogy, 80% of watermelon or 100% of a grape. But again, you have all been in trainings with me. I've never badmouthed another carrier, another rep or anything, but our products and our history speaks for itself.
I like it. Okay, very good. And guys, it's here's what's crazy about this business. People do tend to find something that they like, and it can be experience based, it can be product based. Most of the time, it's experience based. So like they go to a carrier, they have a good experience, they get the app goes through easily, they're good. I just feel like these two carriers they're both incredible. Like we write a ton of business with both of them and I have people that love F&G over NLG, I have people that love NLG over F&G. It's you can't like Larry said, you can't go wrong. But I think y'all need to, these are the stuff and questions that you call these guys and talk to them about. Like, what can you do for me to help me grow my, like Devin said, we're trying to get money in your bank account so you can grow your business. How can they help you put money in your bank account to grow your business as fast as possible? Um, will either F&G or NLG be bringing a simplified issued IUL to the market anytime soon?
I have
I can say
fantastic
it's,
news. The answer
yeah,
is
good
yes.
question.
As far as when, I'm not going to give you guys a time horizon, but I unequivocally guarantee you NLG is coming out with an instant decision, approved or denied, relatively soon. What is soon? E-
It's the
end of
same for
year.
both of us, Devin. Yeah.
End of year. Instant decision
Okay.
product, end of year for National Life Group, already in the works.
Yeah, and the same with
Okay.
F&G. We've been working on one for quite some time, but I'm not sure it's going to be end of this year. It'd probably be first quarter of next year.
Okay. Okay. I like it.
Just the great thing about Everlast, the way it is right now, is even though it's still fully underwritten, our approval rate on it's 85%. So we're not just it's we're not denying a lot of people. We're just we're still pushing a lot of those people through with just obviously no exams or anything like that. So an 85% approval rating still on Everlast without APSs or interviews or anything.
Okay. Devin, Alexander wrote this, struggled with F&G. God dang it. Struggled with F&G underwriting and the sales service this year. Too much to continue writing. How can I make this better? Alexander, can you type your number in, or Larry, if you want to put your number in so Alexander can call you. This is why we do this stuff, to figure out if there's glitches, if things need to get fixed. Underwriting is one of those things that I think the longer, and I don't know how long you've been doing this, Alexander, but the longer you do this, the better you get at doing somewhat of a field underwrite. And you should get to the point where, you're right. If you submit an app with NLG or F&G, 95% of the time, whether it's going to get approved or not, they'll maybe 10% of the time, 90% of the time where it gets approved, 10 it doesn't, where someone just maybe didn't tell you something, or maybe they didn't even know. But I think the longer you do this, the easier the underwriting gets. I've been working with F&G as long as y'all have been here. I've never had any customer service issues. I've never had any customer service issues with NLG either. So I don't know. Maybe you guys can reach out and chat. Okay, Luke is asking, I'm 4 months into the business and I want to start writing more IULs. How do I get myself in front of more clients to sell IULs in terms of leads, or just pitching it to my clients for mortgage protection? Okay, I'm going to answer the first part of this, and then I'm going to bring on Jesse to answer the second part. There are IUL leads you can buy. I think people get a little confused. Their expectations might be off a little bit when they hear the word IUL lead. Like, they're expecting folks to go, "Oh, I want to put $1,000 a month away every month to build retirement, or 5,000, or 20,000 a month," right? The average IUL application amount is under $300 a month across the board. So, like, I don't want to say I'm not a huge fan of IEL leads. I'm a huge fan of any lead. Put a lead in front of me and I'm fired up. But I think you just have to understand and manage your expectations of what to expect with an IUL lead. I've had people get IUL leads because Mike, who's in my office, generates leads. He's great at it. We do all kinds. But we get people that get IUL leads, and then they complain like, "Oh, the client, needed final expense." Well, then some final expense. Like, our job is to service a client. A lead is just a type. There were many mortgage appointments that I ran where they wound up just getting a final expense plan for even a funeral. Maybe it wasn't even meant to cover their equity, protect their equity, or transfer the asset. It was just flat out burial court coverage because they had nothing. So I think you don't want to get pigeonholed into going, "I'm buying these types of leads to sell this type of product." This is a 4-quadrant business for us: IULs, final expense, term, and annuities. You do all four. Whether you're buying mortgage protection leads, or IUL leads, or final expense leads, you should be doing a full financial inventory so that you can best identify what that client needs and serve them the best way. That's my answer to it. Jesse, I'm going to let you add, because you do buy IUL leads and you write a lot of business. So I want your input on this. But I
Yeah.
also love IULs for mortgage protection. I wrote a ton of IUL business for mortgage protection back when I was in the field. And again, I'm not going to talk about sales. I'm not in the field anymore, but I love mortgage.
Yeah, it's funny you say that because I had an agent yesterday who had sold a while ago, like 7, 8 years ago he had sold, and so his brain was triggered for mortgage protection as return of premium, to term return of premium product. And I was with the client, I couldn't help him out, so he called Americo, and they walked them through everything, the pricing of the CBO, and they're like, why aren't you doing the IUL instead of a CBO? Because at the end of this time, and did the comparison, and he like had no idea. And I'm like, bro, did you look at the onboarding doc I sent you with the video about the American IUL? Like, just
Yeah.
do the onboarding. But so there's a lot of great products out there. I think the thing is with leads, to your main question, your conversation, at least I'm finding with leads, is you really have to bifurcate your conversation, because just because a person wants an IUL doesn't mean they're an IUL client. Just because they said they want to be their own bank, they want to be their own bank, they want to start a business, they want to have they want to do what the Rockefellers did, or what my favorite is lately. People ask what the Roosevelts did. I'm like, it's Rockefeller, but they want to do the waterfall method. They want to do all these things, and they have diabetes, high blood pressure, they're 62 years old, and they got $50. So that person is not the quote IUL person necessarily, especially if they don't have any life insurance and got 5 kids and they need to pay for their burial. That's like final expense. That doesn't mean you might not sell them an Americo IUL or an IULE. You could sell that to them, but that's not necessarily what we're talking about with an quote IUL. So your IUL leads, you're going to get a mixed bag. You're going to have the person who has money, who wants to kind of substitute their 401k, and you're going to do a structured IUL for them. And then you're going to have the person who is not healthy enough, so you have to go final expense. Wants to get a bajillion dollars for $4, so you need to do term. Wants to, do all the amazing things in the world, but they don't have any money. So for that, you're going to just one call close them into the product that you would have anyway. And it might be an IUL. It's probably not going to be a structured one, but it's whatever product is going to deliver on what they want. So the IUL leads, I will promise you, all of the magical IUL lead companies, there are some good ones out there, and most of them will promise you that everyone's going to be super qualified and have tons of money. But what I've found is that there's like, if you get 100 leads, there's probably 4 people that have money. There's probably 20 people that want an IUL that don't really have that kind of money, and that you could get them sort of coverage. And you're going to close out of 100 leads, you're going to close 10. You're going to get 1 or 2 IULs that you pop on the board, and people are like, damn, what leads are you buying? Because you sold that one. Like I sold 11,000 and 8,000 this week. And of course, that's the magical leads. No, but there were 20 people I talked to, 10 of which I didn't close because there was either reason, and then I got a bunch of $100 policies and a $50 policy in there. I think it was $47. So that's IUL leads. 1 in 100 is going to be your big dog, maybe 2. 10 are gonna be nowhere near that, but you can get something from it. And then the other 80 or 90 are just like leads. Like that's just what it is. So that's what I look at leads. Like they're not all magic.
This is very true. I love that perspective, because I do believe that, you know, if y'all are building, if you have a team, like it's your job to manage their expectations or just communicate. Like if I'm a brand new agent and Jesse goes through that whole spiel with me, when I pick up the phone and I buy a batch of IUL leads and the first 2 people are broke or, need final expense, I'm not freaking out because he already told me that's what I can expect. I think the frustration comes in when, like Jesse said, a lead company goes, our leads are magical, everybody's qualified. That's, first of all, that's BS. Like I'm sorry, there is no such thing. It's just a lead. It means it's a potential person for you to speak to that might need your help if they like and trust you. Period. End of story. So good stuff. I think that nails that pretty good. Um,
Hey,
uh,
Frank.
Go ahead, Larry.
One other quick thing that I always just tell agents is that if you're, basically any lead can turn into an IUL lead, especially if you're looking at final expense and you have older clients. You just got to ask them if they have any grandkids, any kids or grandkids, and if you're looking to get into the IUL space, without buying specific leads. Juvenile IULs are the easiest way to get in because they're all instantly approved for most carriers, and they're one of the easiest things to sell when you illustrate like a $50 to $100 a month IUL on a juvenile. They just look so amazing, and so they're really hard to turn down. And so all your final expense leads can turn into multiple juvenile IUL leads.
That's a great point, and he's extreme. When you illustrate a 5-year-old for 50 years or 60, it's mind-boggling what the numbers look like. Um, so
Yep.
I agree with that, Larry. Good point. With IUL products, are monthly payments fixed or flexible in cases that client is unable to make their regular monthly payment? This is a really good question, and I think I'll let Devin, Larry, and Jesse answer this because I think there's a way you explain this payment, but I'll let y'all go ahead and do that. Devin, you want to answer that first?
So it's no secret. The more you pay into the IUL and the longer you pay, the better that it's going to be, right? So if I'm a 1-year-old baby and I'm getting my IUL funded, that's different than being a 70-year-old smoker, right? But at the end of the day, the more you pay and the longer you pay, the better it's going to be. So with that said, let's think about this for a second. The product name at National Life Group is Flex Life, and that's intentional. It's obviously a very, very flexible payment. So there's different costs, and I'm gonna get into the weeds, but stay with me for a second because I compare IULs to hot dogs. I love a good hot dog, but don't tell me how it's made, right? So you definitely don't want to dig into this with the clients. I'm just giving you ammunition so you guys have a little bit of clarity behind it all. Cost of insurance is one out of many expenses inside of an IUL. Your cost of insurance will always continue to increase no matter what. Why? I'm more likely to die tomorrow than I am today. But most IULs are front loaded, meaning a lot of the expenses are taken care of in the early years. So as far as paying for your monthly payment, if you've max funded an IUL for at least 10 years, and if rates perform how the companies think they're going to, then you're probably going to be fine, as long as that carrier doesn't eat at your costs after the policy's issued. So with all that said, I know it's a very political answer, and I'm going to land the plane. If you make your minimum payments, there are certain riders that guarantee the death benefit no matter what for a certain duration, but it's all about how the rates perform, how the company structures the product, and you can't not pay your mortgage and keep your home. And IUL is no different at the end of the day. So I know I came at that from different angles, but it's because the answer isn't really that simple. But again, as long as you make the payment, you're fine and the policy shouldn't explode.
No, that's a good way to explain it. I think for someone that's really new, and somebody explained an IUL to me this way, and it made so much sense. I think I'm gonna spend some time explaining to y'all. And if you guys know IULs, I'm sorry. This is very, very basic. But essentially, it's if you buy insurance, an IUL at age 20, they're going to price you depending on what product, what company. Let's say for a 40-year-old, right? A 20-year no lapse guarantee. They might price you for age 40. Well, let's say the cost of insurance at age 20 is $50. The cost of that same coverage at 40 would be $150. That means you're paying $150. Well, that extra 100, because the cost of insurance for you at 20 is only 50, you're paying 150. That extra 100 goes into a bucket, right? You keep putting money into this bucket. Now, what happens is when you hit what I say, 20 and 40, when you hit 40, you're paying 150, the cost of insurance is 150. No more goes into this bucket. At 41, the cost of insurance goes to 156. You're paying 150. They take $3 out or $6 out of this bucket every month to offset your payment. Okay. So this bucket starts to drain if you continue to pay the 150. At age 50, it might be $200 a month. They're taking $50 every month out of this bucket. When this bucket is empty, the policy lapse, right? The way to fund an IUL is or the way to correctly write an IUL to last, for as close to ever as possible is to max fund it so that you're dumping so much in this bucket, and what goes in this bucket is compounding interest, so it grows inevitably, so that by the time you get to the point where the tipping point where the cost of insurance is what you're paying, there's so much in this bucket that you can't run out. Does that make sense? And Larry and Devin, like this is the way I've explained this to all of my clients throughout the years, and it seems to just make sense because it's very simple to understand that way. So even when you get into making adjustable payments on IUL, if you can lower your payment, maybe one month if you're paying an extra $250 into an IUL every month, and one month you get a flat tire and you need an extra $200 and you want to pay, you know, $200 less that month, not going to hurt you. But if that payment is dropped significant for a significant period of time, that bucket gets filled less, and then eventually that bucket will end sooner. which is a simple way to explain it. Larry, did you want to add anything to that question?
No, it's pretty covered. I think it really goes down to how it's designed initially. If you design it at minimum premium, then yeah, it's going to be a lot less flexible than if you design it correctly, or just use the standard solves that the carriers have built into that, so that there is overfunding automatically in there,
Yeah.
and then it can be more flexible. Yeah, usually. I would usually tell a client year one, maybe not so much, but when you get into a couple years of index crediting and you have some cash value built up in there, then you can be a little more secure. But and to always tell them that they can always call the carrier, they can always call the company and say, what can I do? What could I drop my payment to temporarily and still, make sure that this doesn't affect the policy that much. So they're
For
they're
sure.
always there to help.
Perfect. Well, I got you, Larry. Can you please clarify for Paul when to apply for Everlast over Pathsetter?
Everlast more protection focused. So if they want a death benefit that they have a specific amount, they want to say, I need 250,000 to last the rest of my life, that kind of thing. That's more Everlast. There are some conditions where Everlast will actually outperform Pass Setter on older clients, like in their 60s. So you would want to look at both of them if they're trying to do cash accumulation in their 60s. Everlast can sometimes actually beat Pass Setter, but that's a rarity.
Okay.
So yeah.
This was a good question. When putting in extra money into an IUL, does it all go into your cash account, or does it also raise the cost of insurance? Jesse's kind of answering it. Devin, I'm going to give you an opportunity to answer this one. I think it's a good question, and it should work across the board the same way with all carriers, I would imagine. But if Larry has something different to say, we'll let him, and then if Jesse needs to add in, we'll do that.
Yeah, I mean, to answer it very simply, yes, any extra premium you put in should go to the cash value. But again, cost of insurance can be relative and it's looked at in very different ways. But if your death benefit increases, your cost of insurance also increases. But I'm going to let you guys in on a little secret. Whether you're new or really experienced with IULs, this should be the ultimate goal in any single IUL. So the difference of cash value and death benefit is what's called net amount at risk. The lower net amount at risk you have, the better the policy is for your IUL. So I'll give you guys a specific example. When you design the cases using minimum death benefit max cash value, the policy FNG NLG is going to try to make the cash value match the death benefit as quickly as possible, and that's very intentional. So the lower your net amount at risk, the better. But keeping it simple, if your death benefit increases, your cost of insurance is going to increase as well. But if you pay more cash into the policy, yes, ideally it does go to the cash value.
And doesn't get hit with fees or anything like that, correct?
There's always
The
fees.
fees are built in.
The
Right. But
fees are built in.
if
Yeah.
my payment's set at 250, but I could pay 350 and I pay 350, that extra 100 is just going into cash the majority of the time.
It depends, but my short answer is yes. Anything above what
Okay.
you pay should go to the cash value. Yes, generally speaking.
Okay.
Yep.
Larry?
Yeah, completely the same.
Okay. Perfect. All right, guys. It's 12:40, so we usually try to keep this around a half hour. If y'all didn't get any questions answered, I don't know, Devin, if you want to put your contact information in there. Larry put his in earlier. Guys, reach out to the carriers. They're here to help. We have a SRS team that can help with annuities and IULs both. So you go right to Gateway. I'm going to show y'all right now how to do this, just so you know. Can y'all see my screen? Let's go to familyfirstlife.com, log in. Ask a Specialist is right here. You click that button and you can go annuity, IUL, or if you find IBC, infinite banking client potential, you can do that as well. Just fill this out, hit submit, and one of the Ask a Specialist team members will get back to you within, they say 48, I like to say 24. If y'all are submitting Ask a Specialist requests and it's taking 48 hours to get back to you, please call me. Most of y'all have my number, but I'm going to put it in here right now. And my email address, please call or email me because I think we need to do a better job at time management if it's taking 48 hours. So that being said, Larry, Devin, Jesse, David, Gavin, if you're on here, thank you all so much for taking time to share with us today. I appreciate it. You guys are the best. We love y'all. Without y'all, we wouldn't be a company. So we appreciate what you do. Make it a big week, guys. We'll see you Monday on the Builders Call at noon, fflbuilderscall.com. Have a good weekend, everybody. Bye.